Hi there, I'm Matthew Wiseman, Director and Mortgage Advisor at the Money Hub. So lots of people like to raise money for home improvement. Now this may be a new kitchen, a new bathroom, a loft conversion perhaps, or a big extension. So today I'm doing a quick video about ways in which you can raise money for home improvements. So the first way in which you can raise money is through an unsecured loan, or what's also known as a personal loan. Now these are available through your high street banks, and there are also online providers also. You can typically borrow between £1,000 and £25,000 and over a term of 1 to 5 years. And the good things with these loans is that it's very quick and easy. You can do it all online. And if you've got a good credit score, generally the rates are pretty low. Some of the downsides with these type of loans is if your credit score is not very high or you've got bad credit, you may struggle to get a loan. And if you do get accepted, the interest rate may be quite high. But also, if you want to borrow, for example, £25,000 over a period of 5 years, the monthly payments may be quite expensive for yourself. So the second option is a remortgage. So this is where you take out a new mortgage with either your existing provider or with a new lender, and at the same time, borrow the extra money that you want for home improvements. So the good reasons for this is that you can generally with a remortgage borrow larger sums of money, so 50 or 100,000 or more perhaps. And secondly, you can spread the monthly payments over a longer term. So you could do it over 15 or 20 or 25 years, for example. So when it comes to the sort of the downsides is obviously the more money you borrow over the longer term, the more you're going to pay back in interest in the long run. But also with a remortgage, it's not as quick as an unsecured loan. It will typically take 4 to 6 weeks to go through, and be aware that you will need to provide documentation. So for example, you would need to provide a copy of your ID. So this is copy of your passport or copy of your driving license. You'd need to provide proof of income. So this will be pay slips, P60, accounts or tax overviews and tax calculations. And you will also need to provide bank statements to cover off the last 3 months worth of transactions. And finally, the property will need to be valued. So the third way in which you can look to borrow money is through a secured loan. So this is where you keep your existing mortgage in place and you take out additional borrowing on top for home improvements with either your existing mortgage provider, which is known as a further advance, or you take out a separate loan with a new lender. Now a secured loan is also known as a second mortgage. Now the good reasons for doing a secured loan is you can borrow larger sums of money, so 50 or £100,000 perhaps. You can spread their monthly repayments over a longer term, 15, 20 or 25 years, for example. Now, if you are in the middle of a fixed rate, for example, on your main mortgage, you may have redemption fees to pay if you was to remortgage. So a secured loan would allow you to keep your existing mortgage in place and just borrow the additional on top, therefore avoiding any early redemption fees. Secondly, if, for example, your credit profile has got worse, a remortgage may not be possible. So therefore, you could just borrow the extra as a secured loan, because sometimes secured loan lender providers do offer a bit more flexibility around credit profiles. And thirdly, if you've got your existing mortgage in place over, say, 20 years left to run, you may just want to borrow the extra money over a period of 10 years. You can just keep it separate and therefore pay it off quicker. The downsides with a secured loan is that obviously the more money you borrow over a longer term, the more you're going to pay back in interest. Now a secured loan will typically take about 4 weeks to go through, and you will need to provide documentation. So for example, we would need to see proof of identity. So that's a copy of your passport or your driving license. We would need to see proof of income. So that's pay slips, that's P60s, or maybe your accounts or tax calculations and tax overviews. The property would need to be valued as well, and we would need to see your last 3 months worth of bank statements as well. So ultimately, you should explore all 3 options. Your mortgage broker can give you advice on a remortgage and a secured loan, and ultimately calculate what the best and most effective ways of raising this money for yourself. But once you've got details of all 3 options, you could then make the best decision for yourself and obviously get advice around that. Now, when borrowing money, please make sure it's affordable, as any money you borrow against your property, if you fail to keep up the monthly payments, you may well lose your home. Well, I'm Matthew Wiseman, Mortgage Advisor at the Money Hub. Hopefully you found this video helpful. So if you would like to discuss your options around a remortgage and a secured loan, please get in touch. You can give me a call, send me an email, or visit the website. Thanks for watching.